Okay, so there's this one single announcement that's about to be made, and believe it or not, it could change the cost of your mortgage, your car loan, pretty much the health of the entire US economy. It's a huge decision, and it's all tangled up with the president, the most powerful central bank in the world, and a political firestorm that's been brewing for a while. Let's break it all down.
And you know what set this all off? Just a rumor. That's it, a single piece of speculation. It started as a whisper on Wall Street, but it quickly grew into a roar that sent a pretty serious tremor right through the financial world. And the impact was, well, immediate. The second that rumors started circulating, the US 10-year Treasury yield shot up. Now, you can think of this yield as kind of like the baseline interest rate for the whole country. So when it goes up, it gets more expensive for everyone to borrow money. We're talking everyone from the federal government all the way down to you and me.
So this gets us to the big question, right? Why? Why did one little piece of news put the entire financial system on such high alert? That's what we're going to unpack right now.
It all begins with President Trump. He's right on the verge of announcing his pick for one of the most powerful jobs in the world, the next chair of the Federal Reserve. And the market? Well, the market thinks it already knows who it's going to be.
85%. This is the number that really kicked things off. Prediction markets were giving one candidate, a former Fed governor named Kevin Warsh, a staggering 85% chance of getting the job. Now, Wall Street didn't see this as just a guess. They saw it as a near certainty. And that is precisely what sparked that sudden jump in bond yields.
And here's why the market had such a strong reaction. Wersch is known as an economic hawk. All that means is he's someone who tends to favor higher interest rates to keep inflation under control. So analysts like Logan Mohashimami saw that 85% number and immediately thought, okay, borrowing costs are about to go up. That's a prospect Wall Street clearly wasn't thrilled about.
But while the markets were in a bit of a panic, the White House was playing it cool. A spokesman basically told everyone to just ignore the chatter, calling all the reporting a waste of everyone's time. You've got this huge contrast between the market's very real reaction and the official line coming from Washington.
So let's take a look at the key players in this whole high-stakes decision. Who exactly is on the president's shortlist? From what we hear, the list has been narrowed down to 4 people. You've got Kevin Warsh, of course, the frontrunner causing all the commotion. Then there's Kevin Hassett, who's one of the president's top economic advisors. Christopher Waller is sort of the insider. He's already a governor at the Fed. And finally, you have Rick Rieder, a real heavy hitter from the investment giant BlackRock. So why is everyone so sure it's Warsh? Well, major outlets like CNBC and Bloomberg reported that he was actually spotted at the White House just before the announcement was expected. And in Washington, a meeting like that, at a time like this, that's usually the final signal. It's the tell. Okay, so we know who the candidates are, but to really understand what's at stake, we need to talk about the job itself. Why is the chair of the Federal Reserve arguably the most powerful economic position on the entire planet? At the heart of all this is the central bank. You can think of the Fed as the nation's financial manager. Its entire job, really, is to keep the economy stable by controlling the supply of money and what it costs to borrow it. And the chair is the person who leads this whole operation. Their decisions on interest rates directly affect the cost of your mortgage, your car loan, your credit card debt, you name it. That power manages borrowing costs for the whole country. And because the US dollar is so dominant, these decisions send ripples across the entire global economy. And get this is not a 4-year political job. The person who gets picked begins a 14-year term on the Fed's board. Just let that sink in. That means their influence is going to last long after the current president is out of office. This is a true legacy-defining decision. All right, now we get to the real conflict, because this decision isn't just happening in some economic bubble. No, it's happening right in the middle of a political battlefield, and the battle lines were drawn a long time ago. This lays out the core tension perfectly. On one side, you've got President Trump, who has consistently and very publicly pushed the Fed to slash interest rates to boost the economy. On the other side, you've got the Fed's actual mandate, which is to ensure long-term stability, and to do it independent of any short-term political pressure. As you can imagine, those two goals are often in direct opposition. And that conflict has become incredibly dramatic lately. This timeline shows just how intense the pressure has gotten. A seat opens up on the board. Then, the Justice Department launches a probe into the current Fed chair, Jerome Powell. That move prompts a bipartisan outcry from senators who accuse the president of trying to politically control a supposedly independent institution. And this has led to a major roadblock. Senator Tom Tillis, who's a key Republican on the committee that has to approve the nominee, has basically drawn a line in the sand. He's pledged to block any nominee until the investigation into Powell is finished. That sets the stage for a massive confirmation fight, no matter who the president picks.
And this controversy isn't just swirling around Powell or Warsh. Even another one of the frontrunners, Kevin Hassett, has been criticized. He defended the DOJ probe, and that was called inappropriate by economists who believe that any potential central bank leader should be fiercely defending the institution's independence, not making excuses for political pressure.
So that brings us to the big question. What comes next? An announcement could happen at any moment, and when it does, it's going to kick off a political showdown. The president's choice will finally put an end to months and months of speculation. But you know what? It's also going to be the starting gun for a confirmation battle that will determine the economic direction of this country for over a decade. Ultimately, the specific name that gets announced is almost less important than what that person represents. This whole situation really boils down to one fundamental question. Will the Federal Reserve, an institution designed from the ground up to be independent, maintain that independence, or will it finally bend to intense political will? The answer to that question is going to have consequences for all of us.